Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, I'm going to be having a look at a couple of stocks today. We're going to look at NVIDIA, ticker NVDA, and we're going to be looking at PayPal, ticker PYPL. Two stocks from different sectors don't have to move together. They moved down together, but everything basically did since the 21 high. NVIDIA has since bottomed and moved aggressively higher in a strong rally. PayPal is still meandering around its lows, but like I said, different companies, different sectors, they don't have to move in sympathy with one another. But I thought from a technical point of view, technical exercise, it would be interesting to look at these two stocks which contrast one another. So we're going to start here with NVIDIA. I'm just going to turn the count off for the moment, and we're just going to have a look at where we come to and where we've gone. So price ranges we're going to start with first, from the high in November 21 down into October 22. We had a 68.78% decline. Now, I recently looked at NVIDIA in a live stream and I made the point of saying, you know, when we get open bracket, insert, excellent stock, close bracket, decline of 70%, then we should probably be buying it as an investor because it's an opportunity. Since then, we've seen a 155.15% increase in price to the weekly intra-weekly high, and we sit currently 20.37% off of the high. That's from an intra-weekly high as well. That's not from the weekly close. We're a little below that, but not by much. So a hell of a rally off of the low, looking very impulsive, looking very strong. But what goes up in 5 completes a larger wave degree 1, at least by my count, and comes back in 3. So there will be a large correction out there in the future, waiting for buyers to come back in and push it once again to new all-time highs. If we look at where we came to regarding our technical support levels here, and we look at our fixed range volume profile, we often find support on the ledges of these things, which represent essentially the lows in these pullbacks, right, where we find buyers step into the market and then push the price higher. And this time we actually fell through that zone and came to this time at the top of this little demand zone here, which is prior resistance becoming price support. Just a little curiosity that we just came in here rather than finding the more likely support level. Sometimes it just overruns a little bit, has to find another level of support. If we look at what that represents from a fib retracement point of view, this long-term red fib here is based on the idea of this being the top of a sub-wave 3 at primary degree, and this would be a wave 4 pullback. That's in the region of it. Also, if we take the major swing low back here and look at the move to the high, we can see that overlaps exactly with the 50% retracement of the move from December 18 to the 21 high. We come back into that demand zone, into that 50, into that overlapping longer term log target at 23.6, and find support. It's not absolutely perfect, but it's good enough, and the move off of the low is pretty strong. If we look at our indicators for a moment, we can see that on the MACD we had divergence building between the lows. On the RSI, on the weekly, we did not have divergence between these lows. We broke that downward trend in the OBV and have now since back tested it and moved higher on our on-balance volume. Now if we come down to the daily time frame and have a look at this, we can see that between these lows here, okay, and these lows here, I should say, excuse me, let me bring that forward in time. So we got strong divergence on the daily time frame, a whole series of lower lows and a whole series of higher lows in the RSI, in the MACD here. So we were showing signs that we were going to bounce, we were heading into a low. On the OBV, once again, we broke that downward channel, and depending on where you draw it, from this high to this high to these highs to these low, we've back tested it and bounced higher, and actually have pushed the OBV to new all-time highs, higher than it was at the peak. So it just looks very strong off of the lows. If we come back to the weekly time frame and we bring up the exponential moving averages, We can see we also fell in the region of the 250 exponential weekly moving average, which is the green line here. We actually broke it and it looked quite bearish for a while. Excuse me, but during that time we were building that bullish divergence. This has been major support in the past, as we see with this low, this low, this low and this low. Since bottoming, we've put in a little head and shoulders pattern. If we just switch off the inverted head and shoulders pattern, I should say, where we've got shoulder, head, shoulder, and now we've broken out, back tested it on the daily time frame and moved higher since. Alright then, so now let's come in and have a look at the Elliott wave count, shall we, and bring it down to the 4 hour here. Now there is a bearish count we'll look at as well. It could be bullish, but it could be bearish. Let's just stop drawing on the chart for a moment. I always forget to go back to the little crosshair. So from the high, we have retraced. Let's go into wave 2, switch it into linear. So we've come into the golden ratio, 61.8. We've broken it, broken the 65 after finding resistance. We've currently back tested the 65, pre-market trading slightly higher. So when you get a golden zone retracement from a potentially bearish move down and a potential free wave move up, that looks like it could be bearish, right? That could be A, that could be B, that could be 1, that could be 2. Now the thing is, if this had come down in a perfect 5 wave move, right, we probably wouldn't have any problem with that, but it's not perfect. It doesn't subdivide beautifully. You can make it into an impulse, so we can still look at this as A, we can still look at this as B. Now the relationship between A, B and C has become quite extreme. It's more likely a wave 3, and if we look, we can see that there has been support from volume and push with this move up, which is more typical of a 3 than of a wave, C wave, and we've broken new highs in the OBV, which is also more typical of a more extensive cumulative bullish volume, suggesting a wave 3 rather than a C. So also coming back through the golden ratio and breaching it with no selling algo picking it up also suggests that's generally more bullish. So in the simplest sense of saying, well, this could be 1, 2, 3, 4, 5 down, right, and 3 back, yes, that looks bearish. And if you want to be bearish and you get 5 down breaking trend and 3 back from here, you can short that from there, and I wouldn't blame you for doing it from a purely Elliott wave structural basis. But I would argue, having breached the golden ratio, having a longer than expected relationship beyond parity with the 1618 here, and also not having the clearest bearish structure down into the lows, give it the benefit of the doubt of it still being bullish for the moment. So confirmed head and shoulders pattern as well. So let's just bring up the count. And the way I make it out is we come down, and because I don't really like this move here as 5, it looks like 3 to me. Now you can say 4, 5 and have a truncated low here, and then say that's 1, and then this is a very sharp 2, and then you come back 3 and 4. I'm not so sure I like that. I prefer to see this as a zigzag, and I prefer to see this as a zigzag, and it's just WX and Y into the lows, and this whole thing's one correction, and that's the primary for the moment. From there we get 5 waves up with an expanding diagonal in the 5th of minuet wave 5 of minute wave 1, come down in a zigzag into minute wave 2, and then from there we're leading up into minute wave 3, potentially topping out soon. This could continue to extend, I'm not so sure. If we look on the daily time frame at the indicators here, we can see that the MACD is starting to show up some divergence. Okay, the RSI is showing up a little bit of divergence, more of a flat top. It's not particularly strong, to be honest. It's not particularly strong bearish divergence, and bullish volume continues to accumulate above that prior level. So there's no really significant sign of weakness yet. So potential to keep pushing here, and you know, we'll see what happens. Wave 4 invalidation point is here at 18790. Let's just add that in. Okay, come back beyond here, and it can't be 1, 2, 3, 4, 5 anymore. It was 3 waves instead, and it was bearish. That's a long way to come back to start getting bearish, though. So you can always hedge your bets, and if you see a break of trend, you know, let's take a regression channel for a moment around this move. Okay, still heading higher in the in this trend at the moment. If you see 5 down, out of here, and 3 back, you know, you can feel free to short it lower if that's your preference and you want to be bearish from here. That's fine. If we see a correction more in line with a 3, then that could well be this 4 over here, which would be here, and then we would carry on pushing up in a 5, and then we can actually get a channel placed around the final position for channel. So if we were to just do that at the moment and take the wave 1, this is proposed wave 3, we're not certain of it yet, and our wave 2 here, project this channel forward to the right, and then we can bring our wave 4 over to here. So at the moment that's kind of what we're expecting based on Elliott waves prime replacement of the channel. We start with a base channel, which we'll show you in a minute, then we start with our 1 to 3 from 2, then we finish with our 2 to 4 from 3 to 5, and they're the channels we place in sequence as an impulse wave develops. So we've got that 1, 2, 3, 4 and 5, looking for something like that. So we won't know the top of the 3s in yet, but once we start to correct and we start to see ourselves fall out of this initial channel and the upward trend break down, we can assume that we're into correction at that point, and then whether we get 5 down and 3 back, or a sideways structure, triangle, combination, flat, any number of things it could be, we don't know yet. But invalidation point for the wave 4 is down here at 187.90, and overall still bullish going to the upside. Now if we do bring up that base channel, we can see we've had very typical behavior so far. So we've had, here's the lows that we build our base channel off, here's the first swing high that we project it forward from, we've come back into this base channel here, and then we come back into it again. This is 3 into 4, this is 3 into 4, and we may well go 3 into 4 again at a larger degree, getting that channel like that. That's very typical behaviour, coming back onto the top of the base channel to test it. We don't always touch the edge of it, we sometimes sink into it. This is why I often like to use what we got here, using a fib channel instead of just a parallel channel, because it shows you all the Fibonacci levels within the channel which you could potentially find support on, as well as horizontal support. So if we look at the short term support resistance, let's have a look what we've got here. That's the longer term. I'm not sure I've done a folder for that. Well, that would now be support, wouldn't it? So local levels, let's have a look. It coincides nicely with that prior high back here, these blips here, and the current high here. So there's a support level. We've also got these prior resistance, these should now be relabeled as support. We could easily come back down to this channel here to find this level, and we've got these prior highs here as well, which should now be relabeled as support as well. And we've got our invalidation point for our wave 4. We wouldn't really want to come that deep in a wave 4, not really. So that's our base channel. Coming back to the top of that or into it would be perfectly normal. So overall, looking bullish. No really strong signs of weakness yet at the highs. Some maybe a little precursor of weakness, but nothing convincing as of yet. Volume still remains pretty strong, and the recent move up has seen within this wave 3 has seen volume climbing the whole time. So strengthening, supporting this, the push from volume supporting this move up. Right, so let's now have a quick look at the bearish count before we come over and have a look at PayPal. Let's switch all this off. I'll put that into the... And you have to forgive me if I'm still talking a bit quietly. My voice, believe it or not, is still recovering from such a sore throat after having COVID. And although I'm pretty much back to full health, if I talk for too long, it tends to break down. Now, on that point, I've started doing 2 live streams a week instead of 1. That way, I've broken them down into 2 2-hour sessions, which seems to spare my voice from getting completely blown out. So, if you're interested in getting on to the Discord, join the Patreon and enjoying those weekly live streams and asking for requests for me to look at, then feel free to sign up. There's a link in the description box below. So where's this bearish count? Why waste trying to find it? There it is. So basically, here's how you'd have to think of it, I think, if you wanted to be bearish. Okay, we need to, this is 5 waves I got this as, we need to relabel this, because that was supposed to be part of the bullish count when I labelled it. A, B, and C. There we go. So this is a very bearish count, right? 70% sell-off wasn't sufficient. This is what this is saying. And you've got 5 down. Like I said, this initial first 5 waves is a bit tricky. I think we have to, if we want to get 5 in here, we have to move a 1 to here and have a very brief B wave, which looks disturbingly like 5 rather than 3. So that doesn't, to me, really wants to be 5, right? So that suggests that that's a flat to me. A, B, C, 3, 3, 5. But if I do move the 1 to there, I can't get 5 down into here. So that's why I favour the bullish count, that's an ABC, that's an ABC, that's a zigzag, that's a flat, that's W, that's X, that's Y. That's why I favour the bullish count coming off of the low. But I think you'd have to go to here and get that 5 wave down to get an impulse, and then what you do with this, I don't know, you'll have to figure out a bearish way of looking at it. We then come down into 3 into 4, just avoiding to overlap. That gives us an A wave down, A, B, C, zigzag back up with an extended C going through the golden ratio and going to a wave 3 target of 1.618%, which if we just illustrate that point now, we're through the 1.618%, so we're beyond the normal parity relationship or the tendency to move towards parity. C's can be extended, A's can be extended, it happens. The relationship is one of which trends towards parity over time. It does not guarantee it. So this could legitimately still be a B wave. Now if that's the case, then we will see a violent breakdown of 5 down and 3 back. Okay, which will come a little too deep for us to be comfortable with it being a wave 4. We will see push from volume bearishly come in to support this. We will see a strong breakdown in momentum and a thrust into bearish conditions on the MACD and the RSI, and the OBV should flatten out, if not give up its bullish accumulation and start to roll over as well. See all of that, and it's possible that this was a B wave. If it comes back beyond the 23.6 and the 38.2% retracements expected for a wave 4, then we can start to think a bit more bearishly. If it comes down in 5 waves while doing that, seeking out the 50% retracement or more, we can probably become bearish in the short term, looking for a retracement to enter short. But that's how I see what the bearish count would have to be. It would have to be 5, A, B, C. But for the meantime, the primary is bullish. Right then, that's NVIDIA. Let's come over and have a look at PayPal. Now, have I got the chart loaded up? Yeah. Tell you what we'll do, we'll just load it up now. Okay, so poor old PayPal. Getting absolutely battered. No move off of the low here. And a huge decline. Like 80% almost, 78.6%, and still very inflated PE ratios, but that's a different point. It's got nothing to do necessarily with the technicals. But what's of interest to me here is on the weekly time frame, we've got this extremely strong bullish divergence building up. Okay, higher low, higher low, higher low, higher low, and all of that was lower low, lower low, lower low, lower low. Okay, we've got higher lows here in the RSI. We want to pop. We really do now. We want to pop higher. That's how it feels. I don't think it's necessarily bullish long term, but I do think a pop higher is coming. You know, we may have another low to make, but sooner or later we're going to have a significant rally on our hands here. Now, it may be a corrective rally, but nevertheless, I think there's potential to make a nice trade off of this one. So that's another reason why I wanted to look at it. So let's just bring up some information here. Local support, we'll come in and have a look at that in a minute. Right, so bring up the daily time frame, shall we? Support and resistance. We've come straight back once again. Let's bring up our fixed range. Well, let's use our visual range volume profile here. So we come, here's that volume node, taking in all of the price data we can see. Here's the ledge of it, and here's the beginning of it. Right, here's the 61.8 and here's the 65. We've come into the 65, piercing the 61.8, and we've finally found support around these pullbacks. Pullback, 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 pullback. Buyers coming into the market, demand inside this volume node, and we've bottomed for the moment. Right, no guarantee that we've actually bottomed, but we've come back roughly to the golden ratio after an 80% sell-off, and we found some kind of support. Alright, we've done it off of bullish divergence building up underneath us as well. We've done enough to at least put in the most bearish case, A. This could be flat, A, B, 1, 2, 3, 4, 5, C, into B, into C. Right, kind of what I'm leaning into, but that means that there's serious potential for a rally here. Okay, even though it's potentially part of a corrective structure. Now it could be finished. It could be 1, 2, 3, 4, 5, 1, 2, and off we go. Could also be that. With the bullish divergence building up at this support level around the golden ratio, and with a lot of bullish divergence building up, I just find that very tempting to keep an eye on. And I put in a couple of local price alerts to see if we break higher in the short term and get an impulse out of the low. If we do, I'm probably going to go long here, because I think that I don't tend to trade corrections, but when they're massive swing corrections over several months, it's as good as trading an impulse, isn't it? Because it is an impulse. It's a motive wave in the sea, and it's still potentially got a lot of gain there. So I'm just keeping an eye on that. And it then gives you the option, if you do believe it's going lower after that, of being bearish again and shorting it. So let's now turn off that support and resistance, that log retrace, and look at a couple of other things on the chart. So we've got some serious damage, technical damage done to the chart, which has not been repaired. This gap here and prior resistance level, this prior resistance level which was support, I feel that these are likely areas for us to correct before we head lower if we're going to be bearish, or the areas that we will repair on the way back up if we're bullish and we bottomed. But revisiting this area here, where there's basically a gap in the volume profile, you know, we're going to want to try and trade in that zone. So here's that same gap extended into the volume range profile. There's nothing in here, right? And there's nothing in here. Now the market often sees these as basically as unfinished business. We need to know whether there was price acceptance in here. Okay, so we never got to test this level from the upside, so we'll want to test it from underneath. Will there be sellers here? Okay, so gaps tend to work like magnets, not all the time, but given enough time, they tend to work like magnets and pull the price back towards them, because we want to. This is unfinished business that needs to be resolved. So from here we can now look at the variable counts that we've got. So first one, and by far the most bearish, is the idea that all of the move down from the high is 5 waves. Okay, and we can label that A. We will get a B, pulling back maybe 50% maybe into this gap, and then we'll get a C down lower. Okay, that's very bearish, but like I said, it gives an opportunity to trade long into this correction. Right, that's one way of looking at it. And I will put that into that folder if it lets me. That's a bullish one. I'm sure I had another count. Anyway, that's the long-term primary count. I think I see 5 waves into a high, and the reason we're getting such a violent and deep correction is because it's a sharp in a wave 2, right, which may not even be done yet. So we've got a big deep correction to come. So that's the bearish case. If we're looking for 1, 2, 3, 4, 5 down into A, looking for B. There's also another way of looking at this, which is this way of looking at it, which is 1, 2, 3, 4, 5 down into A. This is the flat pattern, 3, 3, 1, 2, 3, 4, 5. Looking for the B now, like I said, likely into this 1618 or into this gap to trade into here before coming down in the C. So they're both bearish, bullish in the short term, bearish in the long term. Then we can look at the potential of having completed. Now, it's a struggle, because this is such a convincing impulse wave, much more convincing than a single zigzag. It looks like 5 down, it really, really, really does. So because of that, it makes it less likely to subdivide this as any series of zigzags. So the only way I can do it is to say, well, this to here looks like 5, okay, or a single zigzag. So I can say 1, 2, 3, 4, 5, A, B, C, W, X, expanding leading diagonal A, B, C impulse, Y, 1 and 2. And that's the best way I can get it if I'm going to be bullish into these lows, and it is very tricky to get a clear completed bullish count down here. But we've had potentially 5 waves off of the low, so let's come into that smaller time frame now and have a look at this smaller time frame. So I'm looking for the downward trend we've got going on here. Just switch this into linear for a moment. Let's move it slightly, because we've had a trend like this, haven't we, which we've broken out of, bum, 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 and back tested again. So we've fallen back below this bearish trend, and we're still below it currently. If we look at our local support and resistance here from these previous highs, previous lows becoming resistance, we're still below these major resistance levels. We're back at support now. On the smaller time frame, if we look at our fib channel here, we've come back into the 78.6 through the golden ratio, but still looking bearish. I can't really label this as a completed correction, not yet. I'd be like, if this is bullish, then that's A, this is A, B, C, whatever's going on here, maybe a triangle or something, maybe that's B, C to come. It could be that we're going to make new lows. So for the moment, all I've done is put an alert at this high, and I'm going to put another alert at the lows. And I want to see, let the price develop and tell me what's going on. Right. We've potentially got 5 off of the low, but we don't really seem to have a completed correction yet. So that could just be part of a 3-wave swing, where we've gone something like this, and now we're going to go 1, 2, 3, 4, 5 and continue lower. But if for whatever reason this high gets taken out and I see 1, 2, 3, 4, 5 coming out of here, something that looks impulsive, right, then I'm going to be looking for a higher low again, and there's an opportunity to load up. Alternatively, we're so close to the lows, but if you don't want to have to wait and you don't want to have to time it and you're worried about it, you're not going to get much closer to the lows than where we are currently. Okay, we are within 8.45% of them. So if you're happy with that margin of risk, that would have to be your stop. The most recent pivot here would get it down to an even smaller amount with pre-market here. That would be a stop of 4.59%. I would not advise it myself. I would advise to wait, purely because I don't see an impulse out of here on a smaller degree yet. I'd much rather get a clear impulse out through this bearish trend and the move back. Then I can tighten that up to the prior pivot and get a much smaller margin of risk to trade long off of. So that's what I'm looking to do, and that's why I've got my alerts set where they are. So that's really all I've got for you guys today. I figured PayPal's interesting because it's just stayed down here, and it's just been battered. It's got a lot of bullish divergence building under it. Yes, it can still make new lows, but what I would say when we look at the weekly time frame is it's got to beware of making new lows. because there isn't much left to catch us now. There really isn't. Once you take out this block here, you can see from the volume profile there's not much trading of any significant amount to provide support. Not until you get all the way back down to these levels around 40 bucks. Now that's why I believe in a longer term bearish count kind of could visit that area, couldn't it? It could come down here in A, back in B, down in C, something like that. Now if it has bottomed, we will get a larger 5 out of here at some point, breaking all of that resistance and the 3 back again. So a smaller version of it, then a larger version of it, and then you're on your way. So just keep an eye on it, set a couple of alerts on it. You don't have to trade it of course, but with everything that's building up underneath this, there could be a significant pop higher. So there you go, that's PayPal and NVIDIA. I thought I'd just look at those as a breath of fresh air because I haven't looked at something different for a while, and we'll go back to some normal stuff later in the week. And yeah, if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon and gaining all the various benefits then follow the link in the description box below, head over and feel free to sign up now. Take care guys, and I'll be back with you later. All the best, bye bye.